Hi everyone, this is Amit Sarkar and welcome to our show Tech Talk with Amit and Rinat. This is episode number 5 and today we are going to talk about cryptocurrencies. Cryptocurrency has been lately a very interesting and a very lucrative field for many. Um, there are a lot of options to buy a cryptocurrency, and there are a lot of cryptocurrencies in the market. But people who want to get into it are always confused with what is available, what they can buy, where to buy it, how to buy it, what are the legal implications, tax implications, etc. etc. So, in today's talk, Rinat Malik will talk about cryptocurrencies in general, how to buy them, where can you buy them, and how can you store it, what can you buy using a cryptocurrency, and many other things. So, welcome, Rinat, again to this show.
Thank you, Amit. Yeah, cryptocurrency is a very interesting topic. It has become really popular recently as well, so I am very excited to talk about it. I have, personally, I have been involved with trading cryptocurrencies, mining cryptocurrencies. So I have some knowledge. Obviously, we are going to try and keep it basic level, so it's easier to understand for everyone. We're not going to go into too much technical details in terms of how the calculation is done, but in terms of how in a regular life, how you can take advantage of cryptocurrency, how you can use them, how you can buy them or potentially mine them as well. So that kind of things we're going to cover today.
Thank you so much, Rinath. I think yeah, that will be quite nice. So I mean, let's jump into the topic. So cryptocurrency, it's formed of two words, crypto and currency. So let's talk about what's a currency and what are the different types of currencies that our world has experienced or used so far.
Yeah, that is a very good place to start. Actually, we need to first understand currency, and what implications does it have in our society or in the world as a in general, and then we can talk about this subset of currency, which is cryptocurrency. So going back a little bit more as well, I mean, not just currency, but money and asset, if you like, and how that thing, how this whole thing sort of panned out in our current society. So obviously, eons and eons ago, we didn't have money. We didn't have these paper money that we have now. Even before paper money, there was coins of valuable metals, and even before that, we as humans used to trade using the. I mean, we used to trade with the commodities that we had. Say, for example, there was, I'll give you two cows, and you give me, 200 kilo of rice, and that kind of trade. But obviously that was very difficult because, if you wanted to make smaller trade, then you can't just cut off part of a cow or a goat and then make the trade and then still have the rest of the asset viable for a later transaction. So obviously eventually we, came to, creating this unit of asset which is backed in our society. So we, if everyone agrees that this paper has value, then it does have value in that sense. So when government issues money, it's just, as a country, we all are agreeing that, okay, this piece of paper has this much value. And that's how we can, continue doing trades on very minute level, on a very small level. So it's easier to do very detailed transactions, quite precise give and take between the traders, etc. So I mean, that's how it's evolved, money. Right now, when we use paper money, that has value because government or as a society we decided to give it value. Then there, obviously, with the advent of technology, now we've moved on to virtual money. I mean, when you log on to your bank account, you see your balance, that is money. But there is, you don't have a paper money to hold on to it, but you know that you have an amount of asset or money, or a value that is stored in your bank, and you can trade it when you go to an ATM machine or bank and take out paper money. You're basically converting from virtual money to paper money. But all of these money, or all of these different forms of asset, it's because we all agreed that, say for example, if you work a full-time job, you are trading your time and skill, and in return you're getting the worth of, in return you're getting the value for what you have provided, and that value gets added to your bank account, and then you can use that in different things to purchase different things, make smaller transactions. So yeah, there is different kind of currencies. And some of the currencies are, for example, we hear a lot about fiat currency. That is a currency that is not backed by anything, by something precious metal or something like that. So for example, the paper notes that we have, that is just paper, and that has value because we all decided that it has value. But before this, we used to have gold coins or silver coins. The coins itself had an intrinsic value to it because it was made of a precious metal. Why did gold and silver get chosen as well? Because why are they valuable? Because they are limited within our world. So it's and also gold and silver react less. They don't react easily with other chemical components, so it's easy to store. It's you can keep it long term without losing the weight or without losing the properties of gold or silver. So that's why we chose that, and it's also limited resource, so that has an intrinsic value. And then the fiat currency is when we all decided that, look, carrying around bags of gold is not very practical. And, when we get paid, we would rather just have it sent electronically to our bank account rather than, being delivered a bag of gold or silver. So we've decided that, okay, well, let's now, all decide together that we're going to use paper currency or electronic currency, so to make our lives easier. And ultimately, as long as we all agree that this is how the value is counted, then we can go on with our lives, do the purchases that we want to do. So the concept of money is a social construct, and we're getting something in return of creating value. What is it that actually we're getting? We're getting a placeholder, so we can use that placeholder to make more purchases, get more physical products or a skill or someone's time in return. It has to have a certain set of properties. It has to be agreed by everyone. It has to be trackable, and it has to be limited by the society, controlled by a controlling body of some sort. So if a currency has all of those properties, which cryptocurrencies do, then there is no reason why we can't use this new technology, which is cryptocurrency, as money. So that's the idea. So when we talk about cryptocurrency, I mean, obviously we already talked about electronic versions of the money we already have. Now, those monies are actually governed by the government. In different countries, the government has decided that, okay, for all the transaction in our country, we're gonna create this currency called pound sterling in UK or US dollars, etc., etc. And they control it. So if there is any economic intervention required, for example, we had the pandemic. In that time, a lot of economic intervention was required. The government has some sort of control, so it can save the economy by doing what it thinks is best with money, with the control that it has. Now, it's good. A lot of the times, most of the times, government are acting with the best interest of our with the best interest of everyone, but you can't always rely on that. And some people wouldn't want to trust government as much. And whether you want to or not, it's good to have an alternative rather than relying on one single body who controls all the financial ins and outs of a country. So cryptocurrency, the way it's unique is it can't, the way it's designed, it can't be controlled by one single government or one single body. It is a distributed network of a distributed network blockchain. It uses the blockchain technology, which you may have heard side by side with cryptocurrency, and it is validated by everyone around the world. You can start validating all the transactions that's happening in Bitcoin or other cryptocurrencies today. So that's how it's very transparent, and also it's very distributed. So it's not controlled by any bodies. So that way you're not having to rely on a particular government or any controlling authority if you don't want to. So that's another uh, property of cryptocurrency. So yeah, that's that I would say that is a sort of basic definition of cryptocurrency. It has the same properties as you would expect from money, or to sort of track your assets, and it is based on the blockchain technology, which we're going to go into a bit more detail in a bit, and it is fully virtual. So it's living and staying within the virtual world, electronic world. So it's easy to sort of send or receive, or keep track of.
Thanks, Renat. Wow, that was a very big, very big introduction to what a currency is. So, just to summarize for all our listeners and viewers, basically what Renat has talked about from the beginning of the civilization, we had something called as a barter system where we could exchange goods in return for some other goods. So, as he explained, we could exchange some cows for bags of rice. So that was the barter system. But of course, that was not convenient, and you could not always carry a cow with you and buy some other goods. So we had to come up with some form of currency, and that's when we started trading with precious metals. And as Rinat mentioned, that we use precious metals such as gold and silver because they don't react with their inert metals, so they don't react with the atmosphere. Their shine is preserved, and they are scarce in the world, so that's why it's precious, and that's why it's easy to trade with them. So we had coins which were precious, and it had some intrinsic value because it was physical. Then we moved on to currencies or currency notes, where we had the paper notes, but they were backed by gold. So you can go to a bank, and then you can get some money, say $100, and that would be backed by $100 worth of gold in the bank. And then slowly and gradually we have come to fiat currency, where it's not backed by any gold, and the money and the paper itself doesn't have any value. The value is only decided by the government or the central bank of a country, and that's in essence a fiat currency. And we started with a physical form, and we ended up with a virtual form because of the internet, because how we now use money in a virtual world over the internet. And the fiat currencies and all other currencies, commodities, exchanges can be traded online with the help of banks. But there is something new, which is cryptocurrency. It has all the properties Rinad mentioned, which is It's it's easily accessible. Anyone can use it. It's not governed by a single bank, and so forth. So that's why it's getting so popular. I think Rinat, while you were talking about cryptocurrency in general, uh, I mean, I started thinking about banks. So when we talk about any currency, normally we talk about currencies of a country. So say UK has the British pound, US has the US dollar, and European Union has the euro, and these are basically governed by the central banks of a country. And in order for us to carry or move the currency from one country to another, we have to follow certain regulations. So, what does the role of a bank? Uh, what is the role of a bank in these currencies? And is that the reason why cryptocurrencies emerged? Because there were a lot many banks involved, there were a lot many currencies, there were a lot many countries, and there was just too many regulations involved for the movement of currencies between different countries.
Absolutely. So there. I mean, anyone who has tried to send or receive money from abroad has definitely experienced this. It is not easy. Although recently it has become as easy as possible, but yet it's still not as straightforward as it could be. I mean, it takes days. It requires authorization. It is regulated very heavily and very closely monitored by different governments of different countries. And if you just try to send money abroad, you'll see that you need banks international need, the the receiving bank and sending bank has to talk to each other. There has to be in connection. Sometimes the sending, say for example, if I wanted to send some money to China now, uh, the UK bank that I bank with might not be in direct connection with the Chinese bank where I want to send the money to. So they will then connect to a different Chinese bank where they're already connected to, and then that Chinese bank will then find the recipient bank and then send it to them. So there is a lot of transaction going on in the background, and it's not convenient, and it's also very costly. That's another thing which we also have to take into account, that whenever we're sending money, we are actually there is foreign exchange fees, there is the transaction fees, and the banks charge a lot to send money to different parts of the world. Um, they also the recipient bank also charges as well. So overall, you are losing out a big chunk of the money you were going to transfer just by the process of transferring. Now, obviously, all of these things are regulated, so there are some positives in doing transactions this way, but there are also a lot of negatives. And if we sort of compare it with cryptocurrency, it's quite instantaneous, and you can do a transaction, and it will happen a lot quicker than it does happen with regular money. There is a cost when we're making a cryptocurrency transaction as well, but the cost is relatively less, and also this charge is not going to any bank or any authority. It is sort of the cost of maintaining the whole worldwide blockchain that is required to keep track of all the transaction. So the people or the entities who are doing that, validating each transaction, they are getting a very small percentage, distributed overall for their service of validating all the transaction. So the cost is less, and also it's not governed or controlled by any of the governments, not the recipient bank's government or the sending bank's government. So it is free flowing, less hassle, less time consuming, and less costly.
Okay, so that makes a lot of sense. So, it's cheaper to transfer, it's quicker to transfer, banks are not involved, so it's easy. So now, I mean, we've spoken so much about currencies and banking system and other things, but in the cryptocurrency word itself, what does crypto actually mean? What does it stand for, and why is it called a cryptocurrency and not some other random name?
Yes, of course. So crypto, the word crypto comes from cryptography, which is a way to secure a sort of a piece of information digitally. So if you want to digitally secure something, encrypt something, then you use various encryption methods. So, there are various encryption methods, and cryptocurrency makes use of encrypting all the data or all the information that is, going on in a transaction, and using the, using cryptography, it sort of secures that no, what we don't want is someone to be able to just create, currency on their own without any, without any accountability. So, to sort of stop anyone from doing that, and also sort of securing all the information that is required for a transaction to happen end to end. All of these things are, happening using cryptography by encrypting. There are various encryption methods. I don't know if, AES 256, and then I can't remember a few others. But Amit, do you have any insight on, like, what kind of cryptography is used on?
They use basic hashing, especially for blockchain. And The whole idea is, again, as you mentioned, security. Because the thing is, when you trade currency in a digital world, it's easy to copy something and create it. So if you look at Windows and you take a file, creating a file might take a time, but if you do Control C, Control V, you've actually copied it immediately. So creating a digital asset once takes time, but after that, multiple attempts of creating it takes very little time. So similarly, in a digital world, if you have a currency in a digital format, copying it becomes relatively easy. So the whole idea of cryptocurrency comes is from how do you actually create that currency, and to create that currency, where you were talking about mining, is where you use the algorithms to generate a particular hash of a particular value, of a particular format, of a particular length. And if you are able to generate that hash, then you generate some coins or the currency itself. And so that's where Bitcoin comes, the mining comes, and that's where the encryption happens, because we have to prevent fraud in the system. So if anyone can easily copy a currency, then it's of no value, as you said. So there has to be some fraud prevention mechanisms in place, especially in a digital world.
Yes, absolutely. We need to. I mean, it wouldn't be a currency if everyone could just copy and paste
Yes.
and create more currency.
The other thing is,
And
everyone can have a currency in their own name. So I can have a Amit Sarkar coin, or you can have a Rinat Malik coin, and then we decide which coin is
yeah,
more powerful, or which coin has more value, and then people start trading in those coins, and they decide. And then say people in UK might use Amit Sarkar, but people in US might use Rinat Malik coin, and so there is a competition now. So yeah, it's, I mean, because it's so easy, you have to come up with some method in order to make it more difficult, and that's why they use cryptography to generate these coins. So yeah, that's where the word.
yes, absolutely. And yeah, I mean, this brings that this brings the point that I was mentioning earlier. Yes, anyone could sort of create their own currency, but what is important that as a society, or in the world, if we all agree that that coin is the go-to coin, then that gets the value. If everyone's using it, then it has some value. But
Yes.
yeah, you can start your coin today if you wanted to, but then, if no one's using it, it doesn't really have much value.
True,
So
very true.
that's how the the advanced or the modern currencies work, with value given by the users.
Absolutely, and I think in the crypto world, the first mover advantage is huge, and that's why, I mean, do you want to talk about which are the popular currencies in cryptocurrency itself? Like, do we know about the popular currencies?
Yes. So as soon as you hear cryptocurrency, the next second you'll hear Bitcoin. Bitcoin was the very first cryptocurrency, and initially when it started, obviously no one, took it seriously. But now, because it was the first, it kind of had the time to sort of mature and become known amongst many people. The early adopters have, started using it and saw the benefit, and also saw how, realized the concept of money, and how money could be virtual, money could be digital, and as long as it has the necessary properties, then there is no reason why it can't be, living and be fully digital. Um, One of the other property of Bitcoin, which makes it quite unique, is that it will have a limited number of Bitcoins in circulation ever. So the way it is designed is that it currently is still generating. It's currently didn't reach its full maximum amount yet, but it will, once it does, it will only ever have 21 million Bitcoins, and that would be the maximum limit. And this was set, actually very interestingly, to sort of compare with gold, because gold also has 21. Gold also has a similar amount, a limited amount in this whole world, and the 21 million of Bitcoin was decided to sort of match that in to a degree. So that's because it will always be limited, and there will be a point where no new Bitcoins can be generated. So it will definitely have some value, because if it is controlled and limited, it can't be like governments who are printing, or who are deciding that we're going to circulate more pounds or dollars in the economy. You can't do that just by mere wish of an organization or an authority. So it does have more value because of it. You can do transactions using Bitcoins. It is actually becoming more and more popular day by day. In certain countries, you can literally just pay for your coffee. From your coffee to most of the things that you would want to buy when you go out, you can pay with cryptocurrency, mainly Bitcoin, because Bitcoin is the most popular one. Yeah, so there are Bitcoins, but then because Bitcoin is so popular, there are many other cryptocurrencies. They're all called altcoins, because they're alternative to Bitcoin. But they're all cryptocurrencies, Bitcoin as well as all the other ones. So some of the popular ones after Bitcoin are Ethereum. Then there was Litecoin, and there is Monero coin. There is
I think there is one XRP as well. So I was just before this talk, I was just looking at the crypto exchanges. In terms of volume, Bitcoin is number one, and then we have Ethereum, and then we have XRP in terms of market capitalization, in terms of pure amount that is circulated and the value of the circulated amount. So those are the top
yes,
three as of now, as
top
on
three.
date. Yeah, yeah, yeah.
Yes. They're quite. I mean, the top three or the top five or the top 10. You can easily find that with a quick Google search. Those are the most popular ones. Those are backed by various investors, etc. So those are the one to sort of track or study more, study more. But there are many cryptocurrencies, and if you look at various coin exchanges, you'll see lists and lists of cryptocurrencies, and they are so a lot of the times we hear that when Bitcoin was priced less than $1, a lot of people passed on because they didn't really realize what it would become in future. I myself included, unfortunately. So you know, so people could say, I mean, you could look at it this way: that one of these currencies in the top 100, which now are priced less than $1, could become $10,000 or £10,000 per one unit or one coin. And if you invested now, then obviously you'll get 1,000% return or 10,000% return on your money. So, but obviously the trick is you don't really know which one would become that. So it's no, so there is a trick, but
Yeah, I
they are
think
not to be fully ignored.
I need to add a disclaimer for everyone, and please don't invest without doing market research.
Yes, absolutely.
Yes.
We need to actually.
So the biggest currencies are Bitcoin, Ethereum, and XRP. So if you want to buy any cryptocurrency, please invest in those currencies because they are the top ones in terms of volume and availability, and most of the exchanges support them. Please don't buy any other currency without research because, as Rinat said, uh, because they are brand new and you don't know which one will go up or down. So there is a huge risk. So please be careful.
Yes, absolutely. And even with the top three as well, I mean, your
Yes,
capital
true.
is at risk. Don't take our advice, to make your decision. Please do your full research. Um, but yeah, I mean, it is a good market to get into, definitely.
Okay. So we talked about currencies, cryptography, and then the whole different types of cryptocurrencies. But and you gave an example that especially for cross-border payments where you have to transfer money from one country to another, you if you do in the traditional way using the traditional currencies, then it's quite expensive, it's quite slow. So cryptocurrencies have an advantage, and that's a very good use case. But apart from that, what are the other use cases where cryptocurrencies are actually more favorable than a traditional currency? And do we know why was there a need to actually create a virtual currency in the first place?
So security is one of the other reason. It is more secure because everyone. So every transaction is validated by thousands or hundreds of thousands of people around the world. So it is tracked. Every transaction is tracked, and the history is kept in a global ledger. So it is a lot more secure, a lot more transparent. Um, so the way money is, I mean, if you take any banks, you don't know their master ledger where they have all the data of all the transactions that they have made or people have made within their banking system. But with cryptocurrency, if we're just talking about Bitcoin for now, there is a global ledger which is validated by everyone. So everyone who is doing the mining or doing sort of the validation of all of the transaction, everyone has a copy of every transaction that has taken place from the beginning of of this cryptocurrency. So it is fully secure, it's fully trackable, and it has the whole history available to everyone. So there are so many benefits, yet while being this transparent, it is also secure because when you are making a transaction, you are the recipient. You need to know their recipient wallet address, and you have your address, and so it is in many ways more secure. So security, transparency, and along with all the other benefits we just mentioned as well. So there are many benefits of using cryptocurrency. I think the reason it sort of came about, as an alternative to money is, you know, the need for transparency, the need for a quick transfer mechanism between, different countries. Also, coming away from the reliance of government and other organizations that you don't really need to transfer your own asset. With cryptocurrency nowadays, in many countries like Japan, I think it has adopted Bitcoin quite a lot. So you could, do most of your daily transactions with Bitcoin. It is easier in a lot of ways because you can literally just scan a QR code and make a transaction. It is that easy. So I have seen photos where, even street shops in Japan where, he just has his QR code hanging, and, he's probably selling, some street food, and people are getting it, and then they're just scanning the QR code and that transaction is happening. And then, whatever uh, you know, his account is, he's receiving that money in cryptocurrency, in Bitcoins, for example. So it is easier, convenient. You don't have to carry around a credit card or anything. All you need to have is a digitally saved wallet where you store the cryptocurrency. It's a virtual wallet. It will have an address, which is a piece of string. As long as you have that string, that is all you need to send, receive money, and you don't have to carry anything. You don't have to sort of keep track of your bank online account details, etc. So it has many benefits.
Okay, so that is quite interesting. I mean, you have crypto wallets. So instead of keeping credit cards and debit cards or even cash, you keep the cryptocurrencies or bitcoins or Ethereums or XRPs, and then you can not just use them for cross-border payments, but also to buy a coffee, as you mentioned in Japan. You can buy many other things using them. Plus, because it's not regulated by governments, it's more transparent. So the public as a whole, has more information about what transactions are being made and who has made them. Um, but I think you touched upon a very interesting concept of ledgers, because in a banking system, whenever you deposit or you withdraw cash or you send or receive any payment, you have a ledger, and that ledger records the transaction, so that in future, if there is a dispute, the banks can refer to the ledger and say, this is the statement as per our ledger and as per our records. So basically, if you are trying to do commit any fraud, you can prevent that by referring to the ledger. And similarly, you mentioned that there is a distributed ledger in the crypto world, and then that ledger can be downloaded by everyone. So basically, everyone can see the transactions. So if I have sent some bitcoins to you, Renat, then people can see that. But I'm guessing because it's secure, it means they can only see the transaction. They cannot see who has sent the bitcoin. Correct me if I'm wrong.
So they can see the address. They can't see the person who's attached to the address.
And this
So
address is the address for the wallet, right?
yes,
Okay.
yes. So this is an interesting thing to talk about when we talk about cryptocurrency or Bitcoin. Is there is a sort of misconception that Bitcoin can be used to do a lot of criminal activities or things that you want to hide, but this is a complete myth because it is every transaction is trackable. While while there are ways the if if the sort of the law enforcement authorities go into that much detail, they can actually find out exactly every transaction with the details of whoever is behind it. But it's not very easy to find out for a regular person. So even though everyone has all the transaction records, the global ledger, and you can download it today, that doesn't mean that all your private transactions are, easy to see by everyone. It is difficult to, and there are millions of transactions are happening and happened, billions have happened so far. So without appropriate, capacity, or the technical knowledge, or also the power of computing, without necessary computing power, it is difficult to sort of track down any particular transaction and the people behind it. Because you can potentially, if you sit down and see, from one address how many transaction has been made, and then that way you can sort of guess and make an estimate, but you can't fully track down very easily. But at the same time, law enforcement agencies, if necessary, if they suspected something serious was going on, they can. So that obviously answers the question of, it's not aiding criminal activities in any way. Everything is fully transparent and trackable, but at the same time, it's also keeping your privacy, keeping your information secure.
So basically it's anonymous. So you cannot track who's making the transaction, but you can track the transaction itself.
Yes, you can see all the transactions that are happening right now and has happened in the past. There are other coins which also give you different features. For example, Monero coin, that is designed to give anonymity to people who are using it. So there are different coins. This is why there are different coins. There are a number of popular altcoins who offer you different kind of features. Like they all have different benefits, but at the end of the day, all of them are cryptocurrency, and you can get the general benefit from all of them. But there are different features of different ones.
Okay. This is again, I mean, very interesting to know that transactions are made, it's fully transparent, but there is a myth that, okay, illegal activities can happen using cryptocurrencies, but actually the transactions are all visible. So you can actually track, if you know the address of the person, then you can actually track all the transactions. So that's interesting. So now we talked about where to store them, where to buy, where to receive them, the cryptocurrencies itself. But where can we actually buy them? So if I want today, if I have £100 with me or $100 with me, and I want to buy some Bitcoin, where do I go and buy it?
Sure. So there are various crypto exchanges which lists various number of cryptocurrencies. So some of the popular ones are Coinbase. Then there is Binance. Then there are Bitstamp. You can also use some of the modern bank like Revolut as well to trade cryptocurrencies. The one I personally use is Coinbase. I have an account there, and I can basically send money from my regular bank account to my Coinbase account. It will first be received as British pounds, as I am here in UK, and then inside the Coinbase account, I can buy Bitcoin, Ethereum. They allow, or they have a range of cryptocurrencies which are tradable within their platform, and you can basically just purchase Bitcoin or any other cryptocurrency in their platform. So Coinbase is one of them. You can look at all of the, if you just go to Google crypto exchanges, you'll find a list of them. Obviously, the top ones are going to be the most popular one, and it is probably best to stick with one of the popular ones as it, this technology becomes more adopted by everyone. At this stage, it's good to stick with the popular ones, which are popular for a reason. That's the whole idea of Bitcoin and any cryptocurrency. It's popular because it's backed by everyone. It's believed by everyone. So pick one, and you can send money directly from your bank account. Now, one thing we also have to think about is there are countries where the cryptocurrency is not legalized yet. There could be many reasons. Government could be scared of the new technology. They could also be worried of um, having too many transactions, losing their national reserve. In competition to cryptocurrency. There could be many. And for example, I know for a fact in Bangladesh, currently it's not legalized yet. So if you are listening from a country where it's not legal, then please do respect your country's legal restrictions and don't try to buy or trade cryptocurrencies from a country where it's not legal to do so. But yes, if you wanted to, then in countries where it is legal to own and trade cryptocurrencies, you can transfer money from directly from your bank account and then purchase Bitcoin and keep it in your virtual wallet for later use.
Okay, so this is again, I think it's similar to buying a stock or a share in a company, right? So you have a trading account, and that's what I've understood. So you have a trading account where you transfer your money, and once you identify the share or the stock or the commodity that you want to buy, you place an order, and that stock or share gets credited to your account, and then when you want to sell it, the stock is sold and the amount is credited back to your trading account, and then you can, from the trading account, you can transfer the money to your bank account. Is I think that is how it works, right? In Coinbase as well.
There is There is similarity in that sense, but I would actually just be cautious, trying to compare it to stock market because yes, what you just explained, yes, that is how it is. But at the same time, we also have to remember if we are having to rely on exchanges, then of course, then my money is being controlled by another authority. It's not government, but it's Coinbase or Binance. So what are we finally achieving then? So what we have to remember is we can own and store Bitcoin without relying on any of the exchanges. We can store Bitcoin in a USB drive and have it offline, save that amount of cryptocurrency saved in any removable storage and have it offline, completely uh, non-reliant of anything else, and it will still be there. So definitely just clarifying that you have the full control and full freedom of owning Bitcoin in your computer without relying on anywhere else, any other exchanges. But it's just easier to transfer the money to a known exchange where you can transfer the Bitcoin. And then if you did, say for example, you bought a large chunk of Bitcoins and it is, a sizable amount and you want it to be secure. So then you can take it out of Coinbase, create a offline storage uh, account with an USB drive, and then keep it in your computer if you'd like to do so, or you can create it offline. So no one, there is no way of losing it as long as you don't lose the physical storage utility that you put your coin in. But yeah, you are not in any way tied to or reliant on any of the exchanges. So that way, it's somewhat different from stock exchanges.
That is, I
You
think,
keep
very
it.
interesting because you're right. I mean, if the whole idea of a cryptocurrency is to move away from the banking system and to move away from the regulations and to move away from cross-border transactions and governments, then I think yes, it does make sense to have it for yourself without any control by some exchange, because tomorrow people, and I've read news that exchanges have been hacked, people's accounts and there are a lot of bitcoins or other altcoins have been stolen. So and exchanges can crash. So tomorrow, because it's not a viable business option, those exchanges can crash, so you can lose all your money. So I think you made a very interesting point that yes, you can buy exchange the coins like a stock, but you can own it and store it offline, so you don't have to worry whether the exchange has crashed or not. So that is a very interesting point, that if you don't know the code or if you don't know the wallet address, then you can actually lose the bitcoins that you own because now you've forgotten it. So bitcoins are lost in those
Yes,
wallets, and there are many bitcoins like that which are in wallets which people have forgotten about.
that is true. That is true. I actually know heard this story that this person, one of the early adopters of Bitcoin, and he was mining Bitcoin way early, like in 2009, 10. He had an old laptop, and he just thought, okay, I'm not using this laptop. I'm just gonna leave it at the background, keep it running, have it mine Bitcoins. Just because it's fun. There's nothing to lose. And he left that laptop for like 2, 3 years until his girlfriend was annoyed and was sort of cleaning up, decluttering the house, and threw away the laptop. Obviously, at that time, the Bitcoin was some pennies, so it wasn't worth anything. But then, obviously, a few years later, when the Bitcoin price jumped to £10,000, then obviously, you know, the Bitcoin that was stored in that laptop became really valuable. I think he estimated it would have been about 30 million
Wow.
pounds,
And he
and
just lost it.
he just lost it. He spent a lot of money trying to go to where the laptops are recycled, or to the dumpster, and finding that, but he couldn't. He attempted to find emails or somewhere where those that Bitcoin wallet address was stored, but ultimately that was not found. That his chance of becoming a millionaire overnight was did not come true. But yeah,
So
you're right. There are various wallets that have gone missing, or have
people have forgotten
been
about it, and
forgotten.
yeah.
Yes.
And so this leads to another interesting observation, and that is that if cryptocurrencies are lost in wallets, it means, like, compared to physical currency where you can actually find it eventually, with the electronic currency, if the device on which it is stored is lost or broken or deleted, then you have lost the cryptocurrency forever, and that means those coins will never be in circulation, so you can never buy those coins. So it means, in essence, the amount of coins in circulation has effectively reduced.
That is true. That is true. Yes. I mean, conceptually they exist, but it will just never be used because the owner has forgotten about it. But that is definitely a risk. So you should never, if you want to store it offline, then you should store it so you never lose it. Because then, if you lose that physical, entity, then you are losing the whole asset. Um, if you so but that is definitely a risk of cryptocurrency. But then the paper money also has that risk. I mean, if you lose a bundle of cash, if it dropped out of your pocket, you will never find it. Maybe someone else will, but in this case, in cryptocurrency, no one else will.
It's
um,
lost forever.
Yes, yes. I mean, if you accidentally dropped a note, maybe on the river, that it's similar to that, because it's
Fair enough.
just
So
on.
So moving on, I mean, we talked about wallets and exchanges and where to buy them, but you mentioned in the beginning about blockchain, and cryptocurrencies like Bitcoin are based on blockchain. So can you talk about bit about blockchain? I'm sure this talk, today's tech talk, won't be enough to discuss it in depth, but maybe just a few features of what a blockchain is, and why it's being used, and why is it a very important technology.
So blockchain is a technology in itself. So we have to identify that blockchain is not Bitcoin.
Yes.
Blockchain itself is not cryptocurrency, but blockchain is a technology. Bitcoin or cryptocurrency uses that technology to maintain and circulate the currency around the world. So blockchain is, as the name suggests, is a chain of blocks. In terms of the actual technology, Amit, would you explain that a little bit more in detail?
So, as you rightly mentioned, it is a chain of blocks, and the chain of blocks is nothing but to store an information, and that information is nothing but a transaction. So, in a ledger, you have people having transactions which says A has paid B, B has paid C, and this much amount. So that's a transaction. And what happens is all the transactions, say 10 transactions, are put in one block, and that block is the first block. And then you have another 10 transactions, and you add it to the first block in a chain. Now the thing is, how do you add the block itself? In order to add the block, you have to do some mining, and you have to calculate a hash. That's what the original blockchain idea was based on. So you have to calculate a hash of a particular value, and if you get that hash mathematically or cryptographically, then you get some coins as a reward. Plus, you can add the transaction to the block to the chain. Now, the advantages or the disadvantages that you cannot just remove any block and add something in between. So suppose I have 10 transactions, and that shows that A has paid B and B has paid some amount to C. And then I have another set of transactions that say C has paid D, C has paid A. So that basically tells me how much balance of coins A, B, C, D have based on those two blocks. Now suppose a person who wants to commit fraud, he can add a transaction to say that he has received coins, or he should have this much value of bitcoins. And if he can add that transaction in the middle, then the ledger has a record that this person has this much bitcoin. And if you can commit that fraud, then what is the value of a digital currency? Because the ledger itself now is null and void, because anyone can commit that fraud. So in order to prevent such frauds, what happens is whenever you add a block, you calculate for all the previous blocks attached as well. So the first set of say 1 or 10 blocks you can add and maybe commit fraud. But once you reach a million blocks, when you have to add the 1 million one of a block to the blockchain, you have to calculate the hash for all the entire 1 million blocks. And that makes it mathematically and in terms of computing very, very intensive, energy intensive, because you have to calculate the hash for every single block that has ever been added. And that is the price, and that is where the value comes. Bitcoins are mined using electricity, using energy, and that's why it's very energy intensive. And a lot of people in cold countries are able to mine easily because they can use these computers and these graphic cards and CPUs in a very cold country, and they can run it to mine these currencies without worrying about it getting very hot. So that is the price you pay to get the coins, and then you trade them. So that in essence is a blockchain. Now think like this. This blockchain, as you mentioned, is a piece of technology different from Bitcoin. And in the block, I have added a piece of transaction. A pays B, B pays C. Now instead of those transactions, I can add something else. I can add code, and I can then track the version changes of the code. So that can be stored in a blockchain. I can add housing records. So all the housing records are in a blockchain. I can add health records in a blockchain, so no one can tamper with it. Because if anyone tampers, they would have to tamper with every other record previous. So it becomes very resource and intensive, and that is the beauty of the blockchain. And that as a concept is actually more powerful than Bitcoin. But I think we'll have to do a separate episode for just blockchain. Uh, One of the applications that I know of is that in a country, Estonia, they have used blockchain technology to store all the data. Most of their digital records. Estonia is the most digitally advanced country in the world in terms of governance. Everything there is actually done through digital channels. So all the records of all the public records like health records, tax records, insurance records, or any other records are owned by the public, and they have access to the data. And whenever a government body requests access to the data, they give permission, and that's how government body gets access to their data. And they had a problem that because everything was digital, it could easily get hacked. So they moved all their data and all their technology to blockchain so that it could not be tampered easily. So that's, in essence, that's a blockchain and one application.
Yes, I mean it is a very interesting and very powerful technology, and a lot of organizations, like even big banks, are looking at adopting this technology into their systems, and it does bring a lot of value. There are many benefits to it. So yeah, it would actually be a good idea to have a episode on just on blockchain on its own, because
True,
there
true.
is there is a lot to explore.
Yes, and interestingly, when you mentioned about the governments and the banks using the technology, I actually wanted to ask you that I mean, because you mentioned that anyone can create these currencies, are actually governments trying to create their own digital currency? Because I've read some
Um,
news that the banks of many big countries like US, UK, China, they are exploring this option of creating their own digital currency rather than relying it.
I was. Yeah, I mean, I don't know of any that is in circulation right now, but I was actually logged into Coinbase 2 days ago, and I saw that one of the new currencies that have been added is called USD, and it is tracking the value of US dollars. So it is interesting. I didn't research too much into it, but yes, absolutely, you're right. I'm sure various governments are looking into it, and it would be an interesting transition if that does happen. And it doesn't have to be a transition. It could be, coexisting with the current currency. But yeah, definitely something to keep track. What's that space? Yeah.
Yeah, and I think the other interesting aspect from Bitcoin and blockchain is that, or the cryptocurrency is that it's all distributed because if you look at a country, the ownership of the currency is centralized by a central bank. But with Bitcoin or cryptocurrency, it's decentralized. So I think decentralization is also a powerful aspect. But then with decentralization, what has happened is the miners actually own all the ledgers. So it is trying to become centralized in its own unique way. So that is something interesting that comes out of all these technologies. But anyway, moving on from this, so you buy a cryptocurrency like a stock, okay? And
Mhm.
governments, where you said some governments have made it legal, some governments have not made it legal. So if they made it legal, can they tax the the gain from selling a cryptocurrency?
So right now, I own some cryptocurrency, and I have traded some as well. Um, so right now, I think it's yeah, like if you make gains from forex trading, foreign exchange trading, there is no tax on that, because
Okay.
it's just currency from one currency to another. Um, I don't think cryptocurrency is still classed as that kind of currency. It's still classed as commodity. So that is something to look into. I don't actually have the answer to that.
Okay, no, no, no.
Um,
It is taxable at least in UK as a capital gains tax. But you tax only on the
okay,
profit.
so
So you tax only on the profit. You don't tax on the initial investment. So suppose you invest £1,000 and you sell it for 2,000, you pay tax on 1,000, not on the entire 2,000.
right, okay. So, but when is it tax? I mean, when I
When
bring
you sell it,
the
if you store it, if you never sell it, you never pay tax. The moment you sell, you get the benefit. That's when you pay tax.
right, okay. So that's good. I don't
Yeah,
have to
at
pay
least
tax
that's
on
the UK law
that.
because I also dabbled into buying some XRPs and some, not Bitcoin, but because Bitcoin was very expensive. But yes, you can actually
But you can buy like 0.004 per,
So I was actually coming to that, and that was my next question is that compared to a traditional currency, the smallest unit is for a pound, say it's 1 penny, for a dollar
Mhm.
is 1 cent, for a euro it's 1 cent, for Indian rupee it's 1 paisa, and for Bangladesh, what is the lowest unit?
Similar, it's Poishan,
Paisa.
like
Okay.
Paisa by.
Yes. So it has a smallest unit, but because this is a digital currency, Bitcoin, the beauty of a Bitcoin or any of the cryptocurrency is that you can go up to I don't know, 8 or 9 places of decimal value and still transact with it. So you can break into smaller and smaller and smaller pieces and still use that easily. So can you
Yes,
comment on that?
absolutely. Yeah, that makes Bitcoin quite interesting because right now one Bitcoin is over $10,000, and
Yes.
so if you wanted to buy something and if you couldn't divide it into smaller pieces, then you're kind of stuck with that one Bitcoin until you buy something very expensive. But yeah, because it's digital, that's the beauty of cryptocurrencies. You could go you could actually buy £10 or $10 worth of Bitcoin. It would be 0.000001 or something Bitcoin, but you can do that transaction. You can actually genuinely buy a coffee just by scanning someone's Bitcoin QR code and pay them £2 or less. I mean, you could even make even smaller transaction. The smallest unit, like the way we have, as you mentioned, we have the full amount value, like British pound, and then you have pennies and US dollars, and then you have cents, etc. So for Bitcoin, there is the smallest the smaller the amount does have another name, which is called Satoshi.
Satoshi,
So
yes, yeah,
yes, so the Satoshi, it's named after the creator of Bitcoin, Satoshi Nakamoto.
yes.
So he's the one who designed and created Bitcoin, and this is the name. So you basically 1 million satoshis is one Bitcoin. So that's basically the smaller
The smallest
value
unit of a
of a
Bitcoin.
smaller the
Okay,
name.
so
Yes.
that is very interesting. Thank you. I mean, I was not aware that it had a name. I knew it could be broken, but I was not aware that it had a name. So thank you for sharing that information. We have now looked at exchanges where you can buy, but is there a way where you can compare the value? I mean, do exchanges actually provide an insight into what is the current value of a Bitcoin in comparison to, say, an XRP, or in comparison to an Ethereum, and in comparison with other traditional currencies like a USD, GBP, or Euro?
Yes, absolutely. I mean, just Googling in Google you don't even have to go to an individual website. You can literally just type in one Bitcoin equal how many USD in Google search box, and Google will give you the results itself. And you can also search for the various, search between different cryptocurrencies and different other country-based currencies. So yeah, definitely it's available everywhere really. I mean, it's just any of the exchanges will give you that price as well, what the current price is and the comparison between other currencies. It's actually very easy to get in through a quick search engine.
Okay. So I think that's about it in terms of cryptocurrencies. I want to really thank you, Rinat, for helping us understand what a cryptocurrency is and introducing us to this whole world of cryptocurrencies. I'm sure our viewers and listeners are quite now well educated and well informed. Of course, they would have to, as a disclaimer, we would say that please do your own research. Don't take our word. Please do your own research before investing any kind of money into cryptocurrencies. Um, you can do this as a hobby, or you can do this as an investment, but please please understand that it involves risk. So please don't, please don't invest without actually doing proper research. But I think in the end, I just wanted to summarize what we have discussed. We've discussed the different types of currencies before cryptocurrencies came. We discussed how you can buy those currencies in different exchange, how you can store those currencies in your wallet, and then how you can trade with them. We also discussed about the currency and the underlying technology blockchain. We discussed about some practical applications and what you can actually do with Bitcoin and other cryptocurrencies. And then we talked about how it can it be taxed or not, and etc. etc. So I think hope you find this talk very useful, and we are looking forward to conduct more such talks on various other topics over the next coming weeks. So please subscribe to our channel, and please comment below and like, share, subscribe, and I hope you're enjoying these videos that we are trying to do this. The whole idea of this tech talk is that people who have limited knowledge of technology get a basic understanding of what it is and how they can start and understand, and then they can go to Google or any other platform to gain more knowledge. But our talk is aimed at users to just get their basics and the fundamentals right, so that they have a base on which they can build upon their knowledge. So thank you so much again, Rinat. Do you want to add anything in the end?
Um, yeah, sure. Actually, just want to add one last thing. So as soon as you Google or start researching on cryptocurrency or Bitcoin, you'll see that you can mine Bitcoins or other cryptocurrencies, and add some, mine some of your own, and then by mining, you can also sort of own some. So if you mine cryptocurrencies, because you provided a service, as a return, get some cryptocurrency. So you might become very excited, and you might want to mine some cryptocurrency on your own, and thinking that it will, uh, you know uh, that is a source of income. But just so you know that Bitcoin now, because the way Bitcoin is built, and because it was so lucrative in the beginning, so now so many big organizations have invested and created massive farms with massive computing power, that it's not financially viable anymore to mine Bitcoins. The amount of electricity that it will cost you to mine, and the return you'll get, is actually, it will cost you more in electricity just by running a laptop or your computer, and you'll also lose the efficiency of your CPU or your graphics card by doing this. So don't my advice is, do not try to mine Bitcoins with your home computing system, laptop or desktop, whatever it is. It's just not financially viable anymore. However, if there are other altcoins which, if you literally have nothing to lose, you could have an old laptop running. But again, it is very unlikely that the altcoin you choose will become valuable in the future. So it's just not financially viable anymore. So just before you get excited to do that, just letting you know that probably not the best way to go forward with cryptocurrency at the moment.
Thank you, Renat. I think, yeah, that's a sensible advice. A lot of people might think that they can mine their own bitcoins, but yeah, I think you have given a very sensible advice that yes, it's no longer financially viable to mine your own coins. So just try to buy it, try to understand it, and play with it. But yeah, don't try to mine it. You'll waste a lot of money in electricity.
Yes, yes. I mean, if you have, I mean, I currently have a very old laptop. I am mining some Monero coins. There is very little chance that it will become something. But if it does, right now, I'm probably just spending the same in electricity as I'm getting in Monero coins. But if it becomes, I'm just, it's just a bet that, in 5, 10 years time, if Monero coins becomes as expensive as Bitcoin, then it will have been a good investment. But it is fully, totally risky, and it could just not amount to anything at all. I just don't have any use for that laptop, so I just, for fun, I just kept it. But it's not gonna bring me any, formidable income. There is very little chance of that happening.
True, true, true. So yes, it's a good disclaimer for people. You can do it as a hobby, learn how it is, how it works. It's always good to understand the mechanism of any technology, and that's the aim of this talk. So you learn and you create something, but yes, don't do it for financial gains because you may not get any. So thank you so much again, and hope everyone who's watching and listening to this talk had a good time listening. And we will come back again next week with a new topic. And as we mentioned in our previous talks, we are planning to bring on some guests who can talk about some other interesting topics as well on different technologies. So please keep looking forward to those talks as well, and we will post them really soon. So thank you so much again, and have a lovely day. Bye.